Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. This is not intended to be a negative view on Tesla, but more a realistic view of how this year may play out, particularly for those of you struggling to hold your Tesla stock right now. I'm not saying it's going to get worse before it gets better, although it could. The point of this video is to explain that it's not a continuous ride to the top. There are times when nothing overly exciting can happen, and the stock price can lose its momentum as a result. It's very easy investing when the stock keeps going up, but what about when it goes down and stays down for some time? I know some of you are looking for a cheerleader who's here to help keep you positive about Tesla stock and help you feel good throughout it all, and fair enough, if that's what you need, then there are plenty of YouTube channels for that. I like to look at everything objectively and be realistic. I don't believe in blind loyalty. I research the competition, look at the future financials, or anything that can help give me a solid value to Tesla, rather than hopes and dreams of the future. To me, this has more credibility in my findings, and I take the good with the bad. But if you're not interested in listening to the downsides, then now's the time to change channel and listen to a true fanboy. It's not that there's any particular bad news, it's just that there may not be much good news for the first half of the year to bounce the stock price back to where you want it. I know some of you bought in over $800 and are hurting right now, particularly if you're not experienced with Tesla or stock investing in general. On the positive side, if you were looking at building your position in Tesla, it just got cheaper. This is real investing. Sometimes you have to wait for years for anything to happen. You can't force it. It takes patience. The stock market is a device for transferring money from the impatient to the patient. Firstly, full disclosure, I do not own a crystal ball. I cannot tell you what will happen with the stock. I just like to run scenarios and tell you how I think it might play out. But I hope that my analysis will help you maintain the conviction you had to initially purchase the stock and hold on through the good times and the bad. And remember, it's only a loss if you sell. The objective of this is to prepare you for potential downsides and to be aware they're just temporary, but emotion is fickle and struggles to look further than the present. Also, in no way am I advising you to sell your shares now and buy back later. If you're an investor, then you need to hold and not try and time the market, as anything can happen in the short run. And don't forget, Tesla and Elon want the world to think they are much less successful than they really are. We don't see Tesla's publicity department coming out trying to prop up the stock price, announcing things like, we'll spend $50 billion more on EVs over the next 5 years. No, they don't want the attention. They want to stay under the radar. And Elon doesn't care if you can't handle the volatility. If you believe in the mission, nothing will deter you, and in the long run, he will reward his Elonites. In 2020, the main contributing factors to growth for Tesla were the Fremont Model Y ramp-up and the Shanghai Model 3 ramp-up. That's where the majority of the sales growth came from for Tesla. But now they're pretty much fully ramped up, so that growth has stopped. We do, however, have the Model Y factory in Shanghai still ramping up, but this is Tesla's smallest factory. I haven't done any modelling, but at a guess, I'd estimate the most this factory might do between 20 and 25,000 units this quarter, and possibly 150,000 for the entire year. And if Tesla were able to deliver as many cars in Q1 2021 as they did in Q4 2020 from their other factories, that would take the 180,000 deliveries to around 200,000 total, which is about a 10% increase. Don't get me wrong, 10% is still quite good for a quarter-over-quarter growth, but it's not on target for over 50% annual growth, and this is what investors are seeking and where the stock is valued. But like I said, that was if Tesla could deliver as many cars as Q4 2020 from their other factories. Q4 is always the biggest month of sales for the industry. Q1 is usually the smallest. Also, Tesla pushed really hard to get to that 500,000 annual cars sold milestone. They may not push so hard this quarter. In addition to this, Model S and X production has been down. We assume it may be up and running again now, as it was only meant to be shut down for about 3 weeks. But I don't believe we've had any status updates of where they are, and even if they're back in production, there may be some ramping up required too. In other words, Tesla's two most profitable models are going to be somewhat out of action this quarter. So we may not see a drastic improvement in deliveries for Q1 2020, and we may not see much of an improvement in cash flow. On top of that, Tesla have been ordering more gigapress die-cast machines, which take away from profits. All this investing Tesla make increase the gross margins on their cars, but detracts from the net profits on their sales. The media won't report that they've spent $250 million on gigapresses, and it's resulted in increased margins of 5% a car. No, the media will report on what gives them more clicks. Most people want to see a negative narrative for the company. Why? So they can feel better about themselves, missing out on the investment of a lifetime. It's a relief to most people seeing Tesla fail. they can then live with themselves and tell themselves, "Phew, well, that's a relief I didn't invest in Tesla after all," and laugh at all the suckers who did. How often have you had a conversation or even an argument with someone trying to tell you how Tesla only makes profit from regulatory credits? It's a coping mechanism. People lie to themselves to cope. Remorse is not a pleasant feeling, but headlines and articles to alleviate that help counteract the emotion. The media are likely to be out in full force. Imagine if Tesla only delivers 5% more cars in Q1 than Q4, when Elon has ambitiously announced he'll beat 2020 by more than 50%. You can do the math quite easily and realise that doesn't quite add up. However, we are serious investors who know the company, the CEO, and the plans for the rest of the year. For starters, there are 2 factories that are rumoured to produce 3 times as much as the current existing factories produce, that are nearing production. I say rumoured, as the general consensus is Berlin will do 1 million cars and Texas 2 million cars a year, but we've had no official numbers from Tesla. But if that is the case, then this would quadruple their car output when fully ramped up, likely sometime mid-next year. Not only that, due to all the advances in manufacturing and battery technology, these factories will produce the cars at a much higher margin and faster pace than the previous factories. They'll also be producing cars more local to their consumers and will therefore further cut costs in transportation. But that's still not for some time. We expect Berlin to come online around July this year, and by September, the Tesla Model Y will be the best-selling EV in Europe, and will have majority market share before the end of the year. But this is still some time. By the end of the year, I would hope that it's possible Berlin might produce over 100,000 cars. There are rumours that the Cybertruck and semi-truck are facing delays in Texas, but there will be a Model Y and Model 3 factory there too. It's hard to estimate how many cars they may be able to produce this year, and it won't be towards the end of the year anyway. So what do we have before then that might prop up the stock price? Well, everyone seems to think Tesla might debut the Model 2 soon. There are lots of rumours circulating. But what would be the point of this? They aren't close to being able to put it in production. Announcing it early is just going to attract more potential competition and unnecessary attention. And when Tesla announces a new model, most of the time it has very little effect on the stock price, or even goes down. In the past, it's been done to get pre-orders, but Tesla don't need the pre-order cash for their working capital, or the market research for an outlandish design. But I don't think this car is going to have any trouble selling in any capacity whatsoever. It will be the cheapest car by cost of ownership on the planet. So if the Model 2 launch does happen, it would depend on what info we're given about the car and how impressive the features are for it to move the needle. For example, we may discover that a $25,000 version won't be out for some time, and it will start with a $30,000 version. Sounds like Model 2 will be first built in China, but we haven't heard any news about any new factory being built, and considering the quantity of these we expect them to be making, it should be a pretty big factory, even though the main holdback is likely battery production. But at this stage, it would have to be at least 2 years until the Model 2 was rolling off the production line at any reasonable quantity, so you might expect battery capacity to be ready by then. On the other hand, we just had a new factory announcement in India, and that didn't budge the stock price an inch. Despite the first quarter likely not being great for the Model S and X, I think there is a lot of demand for the new designs, particularly when the Plaid's performance is that impressive. I think they may deliver 90,000 Model S's and X's for the year, getting up around 30,000 a quarter, which was about their peak before the Model 3. This compares to 57,000 in 2020. There could always be some big announcement on FSD, saying they've reached level 5 autonomy. You never know. But on the other hand, it may still be a couple of years away. So I don't think we will see much happen to the stock price for the first half of this year, and in particular the first quarter might disappoint, and then it will start to pick up through the second half. And yes, Tesla will likely make their 50% growth for the year, but that is somewhat already factored into the price. All the profit margins they keep on improving on in the cars are lost in extra capital investments. On the other hand, you never know what Tesla might announce just around the corner, so it's always best to stay invested. So with perhaps 100,000 Model Ys from Berlin, 150,000 Model Ys from Shanghai, and whatever they can produce from Texas, and the extra 30,000 Model S's and X's from last year. In addition to that, I would also expect some improvements in manufacturing to increase the production speed and cost of their existing factories. So all that could equate to an extra 300,000 cars from where Tesla were last year. And if last year they did 500,000, then that would take them to 800,000, which is just above 50% growth. Right? No. Wrong. Very wrong. 500,000 was their total for the year, but their actual run rate by the end of the year was 180,000 in Q4, which, when scaled up annually, is 720,000 cars a year. In addition to that, part of that quarter, the Fremont Model Y was not fully ramped up, nor the Shanghai Model 3. So I see it very possible that Tesla will actually achieve over 1 million deliveries this year, over 100% growth from last year. So just hang in there for the first half of the year. It might not be the easiest, but knowing there is a good chance they will really kick it out of the park on the second half should help you stop pressing that sell button a little bit more. And if you want me to guess a stock price, then it could quite possibly be over $1,000 if they achieve over 1 million, and then no major disasters. And then with Berlin and Texas ramped up the following year, then 2 million deliveries aren't out of the equation, which could even mean $2,000 stock price, particularly if they get moving with energy and any FSD breakthroughs. So my point is to hang in there. In a couple of years, you'll look back and even $800 will look cheap. I can remember when $80 looked expensive. But bear in mind, if it's this hard for Tesla, what chance does any competition have? The competition with market caps of 1/10 the size, with almost as much debt as their companies are worth, having to maintain a vast internal combustion engine business, whilst transitioning more into hybrid, but still working on technologies like turbos, and then meant to learn how to make EVs better than a company 10 times the size that's been doing this for nearly 20 years in an industry they know nothing about. So yeah, it could be a rough first half of the year, but does it matter? Train yourself to be a good investor and try to see the forest for the trees, and understand it's not going to happen overnight. Thanks for listening. Please hit the thumbs up, and don't forget to subscribe.